And Walmart appears to be one of the companies able to manage this uncertain environment. That uncertainty may be why some stock investors look towards small caps, which historically derive their revenue domestically, insulating them a bit from the overseas slowdown. But there are some big, well-known companies that are domestically focused as well. Joining us to talk about those names is Kevin Caron with Washington Crossing Advisors. Kevin, good to see you again. How are you?
I'm good. Thank you for having me.
You know, it is interesting. Walmart was able to kind of weather this uncertain trade storm. Are there other companies that you think have the savvy management team to be able to navigate this particular kind of changing environment?
Sure, and it is an environment that is more difficult overseas than here. So we focus our attention at Washington Crossing on U.S. companies for this segment, and what we're looking for are companies that have very good balance sheets with low debt, very consistent cash flows, but are still sizable. And a couple of names that I've brought with me tonight would be Hormel, the foods company. Very solid company. It's mostly, almost significantly here in the United States in terms of their sales. Their production also here mostly in the United States. And the cash flow there is very consistent. The balance sheets look great. And I think there's a 2% dividend or something close to that, which should make the income investor happy, particularly since that's higher than the Treasury yield.
Some would say,
and then the second,
some would say boring but beautiful if you look at the bottom line, right?
Well, where we are today in the cycle, we are a long way deep into a cycle here, and consequently, if there is an investment to be made, and you're looking out 3 to 5 years, you do want to be thinking about what if something goes wrong. And a company like Hormel, we think, would be able to hold up fairly well.
And your second pick is Cisco. Why do you like that?
Cisco, and now we're talking about the food delivery company here, not the router, not the networking company. So what we see in this business is a dominant leader in its space. They're providing food delivery to restaurants throughout the United States, and ultimately this is a very, very consistent business with, again, very consistent cash flows. Debt is very well managed. We think the balance sheet looks good. They've been buying back some shares, but we think in a responsible way, and has the potential for very nice dividend growth.
On that note, Kevin Caron with Washington Crossing Advisors. Thank you, Kevin.
Thank you.